and welcome to Trey Beckert's GovCon podcast, where we discuss current government contracting trends, compliance matters, and best practices to guide federal contractors forward. I'm Brendan Halloran, a senior manager with Trey Beckert, and with me today are John Bula, a manager, and Chris Morris, a senior associate in Trey Beckert's Government Contractor Advisory Services Group. As part of our continuing series on contractor business systems, today we will be talking about material management and accounting, or MMAS systems. Thanks for joining me today, John and Chris.
Good to be here, Brendan. Thank you.
Good afternoon.
Great. So first, we'll get into some of the details around, what is, material management and accounting system and requirements and criteria. I know we've are pretty far along in our business system series, and we've talked about business systems that are more commonly applied, such as accounting, estimating, and purchasing. And one of the kind of nuances with MMAS is that it's really applicable in those manufacturing or production environments where materials are utilized. And so, a lot of contractors or, some of our clients who may be more services focused, this is one, where they can kind of stay under the radar and not really have this be applicable. But it really is, as we talk through together today, you'll see that there's really just a lot of kind of interplay between systems and within the organization and functional areas to make MMAS work. So again, there are material requirements and standards that are part of cost accounting standards that really do cover material, and MMAS really takes it a step further to more of the kind of operational aspects of how a company runs that. So just to start off, John, can you talk to a little bit, about when is, MMAS going to be a requirement or something that, an organization needs to be thinking about?
Well, thank you, Brendan. And what is material management accounting system? Just briefly, we can say it's a system for planning, controlling, and accounting for the acquisition, use, issuance, and disposition of material. And as Brendan mentioned, it's primarily geared more towards the manufacturing and production type organizations. So what do we mean when we say MMAS? What are those types of acceptable areas we want to talk about? The compliance areas, the elements, the criteria, and so forth. So what we want to say about what's an acceptable MMAS is, in a brief statement, would be it reasonably forecasts material requirements that ensures cost of purchase type material is charged or allocated to a contract based on the time phase requirements we have, and retains consistent, equitable costing of material. And we want to have the contractor have adequate policies, procedures, and operating instructions that adequately describe its MMAS. So as we talk about this, we'll go through, as I mentioned, some of the high-level elements, the more common elements of MMAS. And as we go through our podcast today, we will talk about in more detail these areas. But to kick off, certain areas we want to talk about from the introduction side. An obligation of MMAS to contractors is to maintain an adequate and acceptable system for cost reimbursement or fixed price progress payment contracts exceeding the simplified acquisition threshold. And this does not pertain, and let's keep this in mind, does not pertain to small businesses, educational institutions, or nonprofits. So we want to go through this particular system when a contractor has 40 million in sales in the preceding fiscal year, and the government risk assessment establishes an MMAS review is needed. So there's either one side you have the $40 million threshold, and the other side there might be a significant risk to have this particular audit done by the government. And again, this is not required, and exemptions do exist for small businesses, educational institutions, and nonprofits. Some of the MMAS elements may include a system description, which is an adequate system description we want to have within our policies, procedures, and operating instructions I mentioned earlier. And these must comply with the FAR and DFARS. Now, what's the compliance criteria? And we want to be briefly talk about this. And so we want to ensure cost of purchase material or charge or allocated to a contract are based on valid requirements, as I mentioned before, by certain percents. Now, the certain percents are high. And for an example, for bill of material accuracy, we want to have a 98% accuracy for that particular area. For master production schedule accuracy, we want to have a 95% range. And these are goals in order to ensure that the requirements are both valid and time phased. So we want to continue on and say, from a system standpoint, what's the criteria? We want to have a mechanism to identify within the ERP system a good report, good data to resolve any system control weaknesses. And above all, we want to have a very good audit trail compliance. And this would provide audit trails and maintain records necessary to evaluate system logic and verify through transaction testing the system is operating as required. And getting more into the operational side of this, as far as physical inventories, transfers, cost of material transactions, inventory allocations, and commingled inventories, I'll talk briefly about these also. Now, as far as physical inventories, contractors want to establish and maintain adequate levels of inventory by recording inventory for accuracy, as I mentioned before, with that 95% level. We want to make sure there's a reconciliation of recorded inventory quantities to physical inventory count by part number within a periodic basis, of course. Now we want to talk about transfers. These are detailed descriptions that result in system-generated transfer of parts, very simply. And cost of material transactions is one more element of the MMAS system. We want to have a consistent, or contractors want to have a consistent, equitable logic for costing of material transactions. Inventory allocation is another part of MMAS. I want to ensure that reallocations and credits are processed during the routine billing cycle. Inventories are retained for requirements under contract and allocated to those contracts. And to wrap this up as we continue, I'll talk about commingled inventories. And what this means is we want to have adequate controls to ensure that physically commingled inventories that may include material for which contracts or costs are charged or allocated to cost reimbursement, fixed price, and commercial contracts do not compromise requirements of any MMAS compliance criteria. So with that, I'll pass it back to Brendan. We can talk further about these and continue on with the MMAS system.
Yeah, no, and thanks, Sean. That's a great overview of some of the key, key areas and requirements. I think one of the key things with MMAS to think about is that you mentioned kind of the regulatory threshold and requirements, and I think a big part of MMAS is really that either contracting officer assessment, typically in conjunction with the auditor, as to what is the to conduct that risk assessment in terms of is a review warranted and and or required. And so because I know that over time I've seen where you have a potentially a large contractor that may have multiple sites, and there's really only that production or manufacturing activity at certain sites, so that there's really there's not a need for conducting any kind of surveillance or audit at all sites. It's really focused on where is that material present as part of some of that contract work. And so with that, Chris was kind of leading into what does that review or in this case audit look like if a company is selected, they have the MMAS requirement, and they've been through the risk assessment, and so that's something that needs to happen. Chris, you want to kind of talk about some of your experience with that?
Sure. Thanks, Brendan. Thanks a lot for that as well, John. Just wanted to talk a little bit this afternoon about what activities or expectations can the contractor expect from DCAA as far as their overall goals and responsibilities that they're looking to achieve, as well as what they will be doing, such as walkthroughs, initial planning stage, the risk assessment, and ultimately testing. So with DCAA, once the decision's been made to perform an MMAS, a few of their goals are going to be looking to obtain an understanding of the contractor's compliance with the DFARS criteria, as well as making the determination if the contractor is compliant with the MMAS criteria listed in DFARS. Ultimately, they'll be doing some testing across the DFARS 10 criteria, with the extent of that testing based on the risk of each of those criterias. And then ultimately the audit team, depending on the size of the contractor, will determine if samples or judgmental sample selections will be done to meet or to test for the DFARS compliance. So those are some of the initial things that DCAA, the contractor, can expect from them. Ultimately, report will identify, if necessary, any significant deficiencies and or any less severe significant deficiencies in compliance with the DFARS criteria. So that would be more of an overall approach for DCAA. One of the first things they would do prior to doing a risk assessment is have an initial planning meeting, and that planning meeting will more than likely notify the POCs within the contractor of the upcoming audit. DCAA will be looking to get an understanding of where locations of inventory and production facilities are, schedule any kickoff meetings, identify any significant process and assessing your risk at that time. Internally, DCAA will look through their permanent files to see, are there any prior audit results for MMAS, any recommendations or corrective action plans that needed to be implemented. For the larger companies, they also may do a walkthrough where DCAA comes in and has the various areas that are affected by MMAS to provide a walkthrough. So that could be your finance group, your contracts group, your engineering group, and then maybe even your program management group. So DCAA will be looking to kind of get an understanding of a walkthrough of those functions of what crosses over to MMAS. Ultimately, from there, DCAA will be looking to develop a risk assessment to guide them as far as what attributes to test and how much to test for. And again, the risk assessment would be based on prior audit experience, any relevant aspects of the contractor's environment they found during the walkthrough, any other identified factors that increase the risk of material non-compliance with laws and regulations. And then lastly, the audit team's understanding of relevant key internal controls related to MMAS. And then based on that risk-based evaluation and testing approach, we have the defined criteria requirements, as John had mentioned. And I won't repeat those all again, but a few of those just include your BOM and your MPS accuracy, your inventory accuracy. Part of those valid phase time requirements would also include loan paybacks, which would be found under our material costing criteria 7. And then also lastly, periodic internal reviews. And speaking of periodic internal reviews, we just kind of wanted to talk about how would a contractor prepare for a review by DCAA for MMAS. First, we would look for the contractor to start to look at their internal review process and preparation. Are there already pre-established POCs for each relevant area for DCAA? Is there historical data from testing that's being tracked internally for as far as it relates to BOM accuracy, inventory accuracy, maybe even cycle counts. These are some of the things that you would want to see, or DCAA would want to see a log of to show we are periodically performing monitoring. And then just to wrap up, any training that's being done by the contractor to the various stakeholders internally that touch MMAS, that will be helpful to keep those records. And any training for any external stakeholders and or any reports that might be submitted up to management to let them know what these metrics are on a trendly basis. So those are just a few of the things that we would probably want to look for or can be expected as DCAA moves into an MMAS audit with a potential contractor.
Thanks, Chris.
Mhm.
That's a great overview of kind of the process and some of the key areas. I think one of the things that we're seeing is that obviously, as we've been saying, I think with all the business systems, particularly those that DCA does auditing of, is that their activity levels are certainly increased, and we actually are seeing clients where these MMAS audit programs are have been performed or are getting underway, whereas they may not have had anything that intensive in a number of years. So certainly if you have that requirement, being ready for it, that's some great pointers there. One of the things too is, just, what is it, I think that there's some very kind of immediate, benefits, with business systems and your status. And we've talked through, obviously there's certain very express requirements for accounting systems being approved, as well as, what will, what are some of the benefits. And I think just, one thing to highlight with MMAS is because it does touch on so many functions, is that it really does operationally help it facilitate efficiencies. It does help. I mentioned earlier, cost accounting standards certainly apply to a lot of treatment on material and direct costs. So there's certainly some crossover there in ensuring that you're compliant. And so, just a couple of the areas that can really help, just efficiencies for an organization. It really helps you kind of have accurate material requirements, better define, what your, warehouse space or, what's needed for production. So there really are some very practical things that are benefits of, kind of working towards these criteria. Just in terms of, when we, talk with contractors about, or see, what are some of the, what are some of the typical issues, John, that that folks encounter in terms of whether they're kind of just doing internal monitoring or if they're actually, having a government review.
No, thank you, Brendan. When we talk with various clients over the course of years, there's been probably 6 to 7 that I could say that stand out, that are somewhat common, not just with Cherry Bekaert's clients, but with the industry itself for this particular business system. And the top ones I would come to mind to me would be, there may be inaccurate bill of materials from the engineering department. Certainly that happens frequently. There may be engineering requisition issues. There may be purchase order revisions and inaccuracies. That's very common too, if there's not an internal control process for that. There could be shipping and receiving errors causing inaccurate inventory levels, which is very critical. There may be inaccurate material inventory counts as far as reconciliations. We see that also. There's inventory adjustments that are constantly ongoing throughout the fiscal year for companies to keep track of. And of course, their ERP system, the data integrity of the ERP system is very important as far as reporting. So those are the top ones I would say are the pitfalls of this system for contractors try and implement this system, Brendan.
Yeah, no, great points, and certainly things that some of those are common threads in terms of documentation and internal controls across all systems. But certainly MMAS brings brings its own unique areas and topics to cover. So really appreciate it. So I know that certainly we could talk for hours about MMAS and all of the things that the companies need to take into consideration, and approaches to kind of develop that develop that system that really touches on a lot of functional areas. But we definitely at least scratched the surface today, John and Chris. So appreciate all your input and detail. And certainly, if anyone has any any questions, or has a particular MMAS need or requirement, please feel free to reach out to us, Chris, John, or myself. Again, thanks for joining us, and please join us again for our next podcast.